Hey traders, happy Sunday. Hope you guys are having a fantastic weekend. As always, everything in this presentation is for educational purposes only. We'll kick off here using Thinkorswim. We'll take a look at the major index ETFs. We'll roll into Apple, Amazon, Facebook, and then we're going to take a look at some stocks that are specifically reporting earnings this week. First up is the SPY, the Spiders ETF, S&P ETF. If I zoom in here, we did have 4 down days in the Spiders. We took out Monday's gap up, which was from here to here, but we're still above the 20-day EMA in red, the 50-day SMA in orange. SPY, the S&P 500, is bullish going into this week. If you said to me, well, what happens if the bears start coming in and there's some selling pressure due to all the news media out there, the news events out there? We need to break both of these. The big one is the orange. So the yellow flag is the red line, first sign of trouble. We break below the orange, that is a flat out technical sell signal. And then it just gets more bearish as we would take out a swing low here and a swing low here. We take a look at the Dow via the diamonds. There's the previous all-time high. We have not broken that yet. They're above both moving averages. They are bullish going into this week. We take a look at the Qs, the Nasdaq. There's the all-time high. Yeah, we had 4 down days in the Qs. We haven't even really filled the gap yet, so they're above both moving averages. Bulls are still in control. But like Spiders, if you said, well, what would tech look like if it started to break down? First yellow flag is a close below the red, 20-day EMA. The next one is the orange. That's that 50-day institution, the big one. We break below there. Bears get a technical edge. We take out this little swing low here. That's more bearish. We take out this one. That's major bearish. All right, let's take a look at IWM, Indigo Whiskey Mike, which is the Russell 2000. Previous highs here. We're above all moving averages. It is bullish. And then if we take a look at the mid caps, which we haven't done in quite some time, they're above both moving averages with the previous high here. They're getting there, but they are all technically bullish. So goes Apple, so goes the market. How is Apple doing? They're going to have earnings here in a couple weeks. They gapped up on Monday, and we're just coming back. We haven't even filled the gap. We're above both moving averages. You guessed it, bullish. You don't even need me in these videos. Here is Amazon as the truck drive-bys the house. We had bearish engulfing on Friday on a rise in volume, but we also came off the lows. If Amazon would have closed below both moving averages, this would be a negative technical picture for Amazon heading into this week. This is close enough to create somewhat of a double top. Now, they also have earnings coming up here soon. Not this week, but in a week or two. It's technically bullish because we're above both moving averages. We still have higher lows here. It would need to get back below the orange for Amazon to show a bearish technical chart. How about Faceplant? All right, Facebook is caught between moving averages. We did break out on Monday. We're now below the 50-day in orange. Therefore, technically, it's bearish walking into this week. Is it horribly bearish? Significantly bearish? The answer is no. It's only a little bit, a couple bucks. What is it, $2, $3 below its 50-day? All it needs to do is get right back up there, and then it goes technically bullish. We still do have a swing high here, and then a higher high here. We have a low here, a higher low, and so far this is a higher low. So even though Facebook's below the 50-day, it would need to get back below this little swing low to become more bearish. Below that swing low, more bearish. And you get the idea. So I would just say cautious right now on Facebook walking into this week with the bears having a slight edge. I get asked a lot too, when you see something like this, what does that mean if I was holding stock? Well, from an educational perspective, and you can practice this in a paper trading, virtual trading account. If I have a stock that it's trying to go higher, but it can't seem to get there. It's below the 50-day. It's trying, but it's not looking overly bullish. I mean, I could consider covered calls for a little bit of mini protection that puts some income in my pocket, maybe right up here at the previous highs. Or if I'm really concerned that, hey, we're coming into the heart of earnings season, which is the case this week, maybe I want to buy a protective put already. I could consider practicing this in a virtual account by going at the money, maybe 60, 90 days out in time right now, because we're below the 50. And then if we get back above the 50-day, I could quickly get rid of that put or make it set a new high. Make it show itself. Let us see how strong it really is before I would get rid of my put. Personally, if I was teaching this, in a virtual trading account, which I always have to say, I don't know that it's protective put worthy just yet. I would get much more concerned if it broke below that low, because now the higher lows are gone. And if that happened on higher volume and we closed to close the day, that would be another problem. Right now, it's trying to churn higher. I think maybe by the end of this week, we'll know a little bit more on Facebook. Now, earnings reports this week. IBM is on Monday. And in fact, let me just show you this. So IBM's going to be after market close on Monday. That's what AMC means. BMO's before market open, and you'll see the others. We're going to pick some of these out, and I'll just give you a technical picture of what they look like as we get into these reports. Remember, just like I talked about with Facebook, as these companies come into their earnings reports, if for me to teach this, what I would say is this: if it was money that I could not afford to lose, if a stock were to have a 10, 20 or more percent drop, that's where I may consider that protective put option. And that would typically be, again, at the money, ATM, maybe with a minimum of 45 days in time value, and using monthly options, not the weeklies, because there's often a lot of cases where there's not enough liquidity. Not for everything, but for a lot of them. So if we're in the middle of October, what that means is if I wanted to practice that on IBM, which I can even show you, we'll just go over here, hit trade, type in IBM, 45 to 60 days, we'd be looking at maybe December. The stock's at 125.93, so 125 long put is 615. That is about what? 35-cent bid-ask spread. Maybe I could get it down to 605 or $6. Sometimes these bid-ask spreads, when the market closes, especially on a weekend, they get a little wider than they normally would be if the market was, more liquid and open. So we could probably get a couple pennies off that for sure. Or I could just go out and use a leap option in January, which is usually going to have a lot of open interest. Now there's thousands upon thousands of contracts in the same thing, 655 by 740. The mid there is going to be around 50 cents higher. So maybe we get filled around $7 or so. And then I would have that for that upcoming earnings report. And with IBM, what's interesting is if I do this, look how that stopped. This is pretty, if you will. Let's zoom in. There's just this huge trading range. And unless IBM breaks out of it, it's just sort of, to me, dead weight. It's more of, to use an advanced type strategy, it's bull put, bear call, iron condor type stuff. Now, I wouldn't want to do that before an earnings report, because with all this pent up demand now for 5-6 months, once IBM eventually breaks out of this, it could really rocket higher, maybe challenge the previous high, or come down here and even blow through the lows on an earnings report. So bottom line, even range bound stocks, I'd consider a protective put option on a stock position. But for a new trade, I'd actually wait for the break. Otherwise, to me, it's just dead weight. All right, so that's IBM. I had shown Procter & Gamble. They're still blowing away. People are still stockpiling stuff. They're doing very, very well. Plus, it's a dividend-paying stock. How about Netflix? Netflix was on Tuesday after market close. That's the one I really want to see. I'm just curious because there can be a lot of volatility. With folks staying at home, are they continuing to buy the subscriptions? Are they now pulling back? Are they adding more? If you come back here, it was at 300. Now you're up in 530. But this one too is range bound. We've had this box drawn in for quite some time, remember? I can now pull it over and say, hey, we're still in the box, but we're here. A breakout would be very bullish from a technical picture. A breakdown, the next shot at support is going to be around 400 and change. And then below 400, now we'd probably come all the way down to these lows. In the 300, there's a huge air gap. I'm curious to see how that plays out. And this goes like IBM. If it was money I could not afford to lose, I would want to consider adding a protective put for that earnings report. Texas Instruments, they're sitting there, new highs. Stocks at new highs, if they disappoint, they could easily start dropping like rocks. We haven't really seen that for a lot of companies here this last time. Will this be the quarter? No idea. But even stocks like Texas that are still bullish, I would consider a protective put if I could not afford to lose that money. How about Winnebago? This stock already has dropped, and once it broke the 50-day, just check this out. Everybody's buying them to get out of town, get out of Dodge. We broke the 50-day year by a few pennies. We tried to get back above it, and we did. But then once it was gone the second time, it's never gotten back above. And really, a couple days ago, we hit it, we were rejected, we hit it, one day back below, now we're back above it. That really doesn't count because of the earnings report. This thing, if it's still showing tremendous demand, all-time highs would be the target. It could get there in one day on earnings if the report was that great. However, if good times are priced in, everybody that bought it has bought one of those campers, we could start coming way back down here. This one might prove to be volatile. We'll have to wait and see. You just don't know in these situations, but keep an eye on that one. AutoNation, see how cars are doing. They're sitting up there near all-time highs. What else do we have? We have Tesla at market close on Wednesday, right? Yeah, there's Tesla at market close. We got Wednesday and Thursday are the two big days. Tesla, Chipotle, Las Vegas Sands, which I'll get to in a second. We got CSX. Tesla, this thing, you have some companies coming out doing reports saying it's nothing but fraud, accounting irregularities, and yet the stock keeps going. It just had a 5-for-1 stock split. This thing is sitting bullish. Whether or not it's going to have a big earnings move is anybody's guess. Who knows what they're going to come out and say. It goes back to, hey, can you afford to lose the money or not? That's how I'd be talking to myself. And if I can't, protect what's go on. These are going to be expensive. Downside support, probably maybe down in this area around 300. Upside, sky's the limit, it seems, Tesla. You take a look at Chipotle, sitting up there at all-time highs, also very, very bullish. I was reading a report on Zero Hedge about the win, and was it? I think it was on Zero Hedge. So Las Vegas Sands is the Venetian and the Palazzo. They're right next door to the Wynn. I've stayed in both. They're amazing hotels. If you ever go, they're worth it. It's just a wonderful experience. But the Wynn just closed down Monday, Tuesday, Wednesday, Thursday. They're only open Friday to Sunday. You can't close. All those people are out of jobs. They can't go to the next casino because they're down too. This is going to have an effect on the economy, and we just really haven't seen it show up in the stock market just yet. That what these lockdowns have done and what it's created in terms of a mental picture of people wanting not to travel now. So while Wynn is they're closing their doors, I don't believe from what I could find, Venetian and Palazzo have done the same. It's just one big complex out there for the Venetian and the Palazzo. But look at their stock. It also hasn't done much. We'd have to break above these highs for it to be bullish. And then down here, we would want to break probably below that little double bottom around 43. If it breaks below there, then that would be technically bearish. And then you would probably come down and maybe challenge the lows. Right now, this is one range bound stock. I'm going to say this, it's going to be hard for the Sands to do well, Venetian, Palazzo, if right across the street the Wynn isn't and they got to close 4 days a week. I would doubt there's going to be a massive upside surprise. But if there is, my guess is the shorts are going to run for cover, and this could lead to being a very explosive move if they do beat the report. I just want to keep an eye on that one. We also got CSX. Now, CXX is Wednesday. I don't want to talk about this. CSX is Wednesday, right after market close. UNP is Thursday, Union Pacific. When you have competing companies in the same industry reporting days apart, if I was trading UNP and I wanted to buy a protective put, I'd make sure I have it in place before CSX reports, because if they report a slowdown in freight, which is the opposite of what I'm reading. But remember, sometimes if it didn't increase enough, that's still considered a miss. It doesn't have to actually be negative. They could say, oh my God, business is great, but the street wanted great times 2. They're going to drop. So that means by Tuesday, I would need my protective puts in place for both of these guys. Now, where is CSX sitting up there all-time highs? If it breaks the 50, that will be bearish, especially on an earnings report. It's a break of the 50 on an earnings report is much worse than something just one day below it. All right, and then we had Discover. We can see how the credit card business is going. Discover has tighter credit requirements based on my experiences and talking to friends than Visa, MasterCard, and American Express. If Discover is holding up better yet, they might play catch up to what Visa and MasterCard are doing, because they're not going to be caught in as deep as delinquencies as maybe a Visa or MasterCard would. But just keep an eye on that one. Here is Coke. They're due to report. They really haven't done a whole lot. I don't really trade Coke that often. American Airlines. How are the airlines doing? So American has earnings this week, and so does Southwest. I follow Delta quite closely, but they're all the same. They've been holding up pretty well, considering I was reading some of these reports, and traffic is down so horrifically in so many places that their burn rate, unless they get more taxpayer bailouts, they're just going to be in a lot of trouble, which I think is the reason Berkshire Buffett sold out, a long time ago. They knew the rebound was not going to be that significant. So keep an eye on AAL. My favorite is Delta. just based on their customer service and how they treat their customers. Something above maybe 14 or so could give you a target up into the 20 area. That is a serious move, almost 50%. You break below 11, you come down to 8. That's $3, 30% or so. Not that bad. Southwest, a little more choppy, but to the downside, but a break above 42, that would be technically bullish. And, oh, pool. I want to actually Pulte. I don't know where you guys are, but everybody I talk to, and if I talk to our members, home prices, if you are in the country, they are getting out of cities in droves. They're tired of the taxes. They're tired of the rioting. People want out, and they're buying homes like crazy. So homes around this area are going up left and right. Houses are staying on the market a week or two, which is why stocks like Zillow and others are doing so well. Pulte's doing that well too. And then you take a look at pool. Everyone seems to be buying a pool these days. All-time highs. If they say there's a slowdown and they're not booked as much through next year, we could see a massive gap to the downside. If I was trading pool, this little double bottom right around 290, that's got to hold. If that doesn't hold, there is a long way down before major support would come in. And then let me bring this back up. Friday, what was it? Thursday, we did pool. There's, keep an eye on Intel just for chips and Seagate. Then Friday, we have American Express. But we're already going to have an idea when Discover reports, how is American Express going to do? They would need to take out that high there around 114 to challenge the highs. Otherwise, watch for a break of around 90. Then you start coming down to 80 and then down to 70. So a long video. We talked about a lot of stocks. Bulls have the edge as we head into the election. I'm getting a ton of questions on the election. It's not something that I can comment on a public YouTube video. I will do that though at Financial and at Market Tamer. In the private videos that we'll do there. It just gets a little too crazy. But the market's been bullish when there's been Democratic presidents, Republican presidents. Will this be any different? Who knows? So instead of wondering what may or may not happen and being paralyzed, what I love to teach, and I hope you guys can get that from these videos, you just follow the money. If the big money is hitting the sell button and we take the spiders, no matter who gets elected or who doesn't get elected, because there's going to be time needed to figure it out or whatever it might be, we get below the 50-day, we start closing near the ends of the day, closing at the lows of the day on high volume, it tells you what the big money is doing. And the bears get the edge. So right here, bears had the edge, we get back above. Now bulls have the edge. Sometimes there can be a quick reversal, and then sometimes you have these major trends. So we just take it as we see it. So I wish you guys all the very best. I'll be back with you in next weekend's video. So until then, take good care.